Hey investors, Sean Taggy here. I'm here to check in from my email that I sent on Wednesday of this week about the 200 unit multifamily asset that we are about and hopefully about to get under contract in Nashville, Tennessee. We are in the highest and best round. Offers are due today. So to get us versus two other groups that are offering on the Nashville deal, we have a third chance, but we feel even higher because we know the broker. We've already done a deal with him and he likes our track record and is just stating that and pledging for us to the seller. So we feel pretty confident we might be able to get the deal. We'll be able to know next week. I've had lots of interest in the deal. We've had about half of the 15 million soft reserved, some larger investors willing to commit quite a bit, and then dozens of other investors in the 50 to $200,000 range are also have given a soft commitment. So I still need some more interest on the property and just want to gauge a little bit more of that. And in order to do that, I've had lots of questions, so I figured I might as well just answer all the frequently asked questions I've been receiving. Thank you so much for your questions, phone calls, and emails. And so here I'll just kind of dive into some more details that I can share with you. So as we know, Nashville is at about a 2.5% unemployment rate, and Oracle, a big cloud computing software company, is moving into Nashville in the downtown area and creating 8,500 jobs. And those are around $110,000 a year jobs, so some nice high-paying jobs. And it's about a $1.3 billion investment. So this property is about 20 minutes, 15 minutes from that location. And as we know, rents are super high down in the core of the city. So this is a nice, highly desirable suburb. Also about the partnership. So the partnership, one partner has over 25 years experience. He's kind of our anchor partner. He has done over 2,500 multifamily doors. And then the other partners, including myself, all of us combined have done over 3,500 multifamily doors. And so we have a long track record and big experience. In Nashville, we are very experienced. We have two assets, other multifamily complexes, about 270 doors combined nearby this one we're buying. And so we're familiar with the rents. So the one unit, we've been able to raise rents $290 a month. And another unit, we are able to raise rents $400 a month per unit. Now, so as you can see, we hold back for some really good deals and we put some conservative underwriting. One of the deals we bought in 2021, we bought for 14 million and now just appraised for 25 million. So, obviously that's not every single deal, but we like to hold back, really wait for the good ones, try to get a below market, buy right the day one and get a great deal. Also, the property management companies. The property management company is a long history track record in Nashville. They manage over 3,500 doors. And what we really like is they have an in-house renovation company and especially their renovation manager. He has great sub teams under him and he has been able to perform on the renovations that we had on our previous units. And so he feels confident that he can hit the budgets that we have for the 2 million to help raise rents on the property. So great, go hand in hand with that property management company. And they have a lot of data and market statistics to help us know that we can perform with the rent increases that we're projecting. And so, yeah, that's a lot of questions that I have been receiving. Another one is the minimum investment. So we're thinking of putting the minimum investment around 50,000 to 100,000. So please, if you're at 50,000 or more, put your soft reserve in. Even if you're below that, put as much as you feel comfortable with, of course. And it's just good to have you down in your interest level so we can contact you. So please come down here and put in your interest form. As mentioned, we've raised about half soft committed for the deal of the 15 million total raise. It'll be about a $30 million purchase. We also put some conservative underwriting. Yeah, that's other questions. So we've used CoStar data to do our rent projections, and we're putting 2% to 5% rent increases over the next 3 to 5 years. So pretty conservative for the next couple of years on rent increases. And what we're using is CoStar. CoStar is a big national data tracking company of multifamily commercial real estate. They're pretty much the gold standard of projections and the data that almost every multifamily investor I know of uses them. So we're using their rent projections for that. And so that's very exciting as well. We're putting, pretty conservative underwriting, we feel. We know where we're at in the economy and everything like that. But what it is, it's nice to have some of your money placed. When I'm talking to a lot of investors, it's a great opportunity for some tax sheltering. So I'm estimating, I'll have more data on this, but if you put in 100,000 with the cost segregation study, around 65% of that year one with the bonus depreciation in place would be able to be written off, depending if you are a full-time real estate investor or not, and your tax bracket. You can talk to your accountant on that, but it can be some really awesome tax advantages and a tax ROI just year one alone. And then, of course, the long-term appreciation, the mortgage pay down, and all the other benefits of owning real estate. So thanks so much, everyone, for your time. Don't forget to put your soft reserve in, and let me know if you have any questions. We'll talk to you next time. Have a good one. Thank you so much.